let me just real quick share the screen. Okay, can you guys see our screen? We do have quite an interesting example of the, the thing that is a juice wicks, right, happening right there. Good. Okay, let me just copy that question and paste it on my charts. So right, so you asked regarding the wicks, right? Do you neglect them to use the bodies, or you just utilize them as liquidity, or how it works, right? So two things, right? You can't neglect wicks, right? And you can't neglect the bodies, right? So wicks generally shows you the damage, the rejections, right? And then the bodies, they are like just they're referring towards the strength in the market, right? Now understanding three different things regarding wicks is that whenever okay, so I'm gonna just create a general scenario, right? So most probably the news wicks, right? If they are inducing some sort of valid liquidity, they end up becoming liquidity point, right? So you're gonna see something like this, right? Market is just in an uptrend, and we have something like this, right? We had a news at this point creating a wick, right? But in this scenario, we never really took out some sort of valid liquidity to the left. So then we utilize this wick high as our liquidity, which obviously is a point of liquidity caused by the news, right? So this is one scenario where you could identify those wicks as liquidity points, right? But for an instance, we have some sort of valid liquidities to the left, then there's a high chance that price is going to respect that, and then we can classify this as a valid inducement, right, of these old highs, right? So this is first thing regarding the wicks, right? And then the next thing is that let's say we have a spike up, and then we have no real intentions of price moving away from this point, right? So we see a build up phase. So technically then we say that this is also a liquidity point that price could do. What is price could go for a final inducement and then goes low, right? So these are the two scenarios for the wicks, when you can neglect the wicks and when they like shows you the real what do you say, the inducement, so when they becomes liquidity points. I hope it's clear, right? Now coming towards this pretty much example, right? We have this, right? We have this high to the left, right? We took out liquidity with speed and everything, right? Let's just make it this one, and then we see that price liquidates these lows, right? But if you just scroll or just zoom in on the lower time frames, we don't see any sort of real intentions in the market moving away. So this is forming a build-up phase. So in that scenario, we could classify this low as a valid liquidity point, not an inducement. And then what can we do is we can wait for an inducement of these internal highs, get yourself an entry and target these this liquidity point, right? So this is one of the examples where we have this scenario. We have a spike down, right? Spike up, no real intentions of moving away. Spike down, no real intentions of moving away. In a build up phase, you have your liquidity point as the wick, right? And then price takes that, you have the reaction, and then just a normal market cycle, or you would say market structure, right? That is regarding the wicks, right? So it depends on the context, right, and market conditions. You can't really say that, all right, wicks, I'm going to consider them as liquidity points or as liquidations or as inducements, anything like that. All right, good. So, okay, let's move to the next one. Do we have another question? Well, all right, here's the thing, right? There's nothing. as weak inducement or strong inducement, we have liquidity points that we classify whether this is a weak liquidity point. So if it's a weak liquidity point, it's going to give you a smaller reaction. And if it's a stronger liquidity point, it's going to give you a stronger reaction. There's nothing like weak inducements or strong inducements. Inducement is just like one thing. I don't classify my inducements as minor, medium, or major. I don't classify as weak or strong inducements, right? The only difference comes when you mark your liquidity and see, all right, this is a weak point of liquidity. Not much traders were invited at that liquidity point. There's less stop losses, right? There are less orders at that point. So that liquidity point might give you a smaller reaction, right? Now, depending on that reaction from the liquidity point, if you want to classify it as a weak inducement, then it's up to you, right? But there's no such thing as weak or strong inducements, right? It's just the difference between the liquidity points. Okay. Okay. Any other questions? Okay, do we have any other questions? Come on, guys. Oh man, we had this session like after quite a few weeks now. No questions. So good. Yep. Go ahead, buddy. Yep. Okay. Yeah. Let's go this way, right? And this way on liquidity target, right? Okay. Good. First thing, right? I don't use F bosses, right? I just classify everything as an inducement, right? Yep. Not really, right? Again, depends on the context and the market reaction. So the most important thing is that if I'm classifying this as my valid liquidity area, I'd like to see some sort of reaction showing me the intentions that market wants to move away, right? In form of anything, right? Maybe uh, bearish candles coming in, rejections, any sort of that stuff, right? I've discussed, I think, one of the entry models or the rejection phases in my YouTube video as well, right? So if that's there, right, I can classify it as a good inducement and get myself in a trade, right? But let's say that if this is something like this, market gives you a spike up, taking out liquidity and sit like this and then goes up, right? So I can't really say that that is a valid inducement or I'd like price to go lower. Then what I'm going to do is I'm going to wait for the next liquidity point and then wait for the inducement of that, right? And then do what is wait for the same thing that I want price to do it here, right? So if you technically just understand this one, right? We had an inducement with speed and momentum, right? Up there, we had this bearish candle showing us true intentions, right? And leaving us a nice little mitigation zone, right? So once I have all these factors, right? Obviously, I'll be on M1 after this, candle, or sometimes if I see something we're dealing to the left, I can go on M1 straight away, right? And then that's, everything on M1. So this would be a very, very nice entry somewhere up there, right? Like this. And your target's going to be the next liquidity point. There we go. A nice 12 watt, right? The partials I'd like to take is this area of smart money trap, right? Or SMC zone, whatever you want to say it, right? So this, usually depends on the reaction I'm getting after an inducement, right? You can see that this is like my simple step-by-step process of marking up my charts or anything or engaging into a trade. Understanding liquidity, waiting for inducement, and then waiting for a reaction, right? To confirm my bias, right? To confirm the narrative of the markets. That's it. Mm-hmm. Uh-huh. Uh-huh. Yep. 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 So you see, what you could do is that you can manage your trade in such a way that doesn't affect you, right? So your targets, right? Partials are really important. A lot of guys just ignore partials. They want to just catch 1:20s. That's crazy, right? Because I've been doing this for quite a long time and I know that, right? No one likes a volatile equity curve, right? Everyone likes a smooth equity curve, right? With a decent gains, right? So I'll be literal fool that I'm missing 8 hour, right? Just to make 2 more hour, right? So I'm not getting anything. I could close most of my positions. I could understand that, all right, there is some sort of valid mitigation area at my entry zone. So worst case scenario, price comes, mitigates that. I could get myself a re-entry using the profits that I made from the first partials, right? I'm maximize on that trading opportunity, right? And your partials should be always, it should be the nearest liquidity points that you are pretty confirmed price is going to take, right? Perfect. What time units do you work with? I'm still unsure about the price. Okay. If we're talking about time frames, you can just see I do have like a bunch of time frames up there. So my week starts from the daily to, I don't really use 4 hour that much, right? But daily to H1, and then I select the time frame for intraday depending on the clarity, whether it's going to be M5, M15, and then 3M, 1M, 30 seconds, 15 seconds, and 5 seconds. These are my entry time frames, right? So I would say these ones in here, I use them for the first day of the week, right? Just to get myself a general direction, just have an idea where the market could go, right? And then I select the time frame for intraday, which is the most clear one, right? For me, and then I have the rest for the entries, right? So I could go on 5 seconds to 3 minutes just to see which one is more clear, which one is more developed, and get myself engaged in the trade. Is it necessary to wait for sessions or you use the timing when you want to take quality setups, right? So this is one thing that I've been noticing, right, lately is that timings, like previously we had like, most of the good moves happening during timings, and I didn't mind like missing 3 moves out of 10 while getting those sevens. But lately it's been like 50-50. You can have a really good trading opportunity during out of the time, right? So I don't mind taking an A plus setup out of the timings right now. Why is timing there on my charts? Is that it just helps me not, monitor charts all day long. So I know that this is the volatility time, right? If I get into a trade, I could get a quick partial, a quick break even, and then leave the desk, right? So it's just there to reduce my chart time, because the more time you're going to spend on charts, the worse decisions you're going to make. So I like to just have my 100% potentials at chart for the short duration of time, and then I leave the charts. That's why I do have those timings, but I don't really mind taking A plus setups out of timing windows, right? I hope so that makes sense. All right, do we have another question? When does supply demand becomes SMT? I'm still confused about when to identify this. Okay, oh man, general supply and demands. Let me get something in there, right? Okay, so two things, right? If you are just asking about random smart money zones, supply and demand zones, right? I won't really say anything regarding those, right? But when a valid supply demand becomes a smart money trap is when the objective of it is done, right? Because if we are inducing something, right, and we don't have any sort of objective that could attract price towards it, why would price move towards that direction, right? So we have a zone, we have the target, and the target is done. So this zone perform its objective, right? Performs its work, everything. Now, if price comes back, we could mitigate, we could have false reaction, and then we can go and take out the original liquidity of these reactions. Why? Because they're going to have confirmations, place the stop loss above there, and then we can have a potential trade, right? So in simple words, a zone becomes a trap when a valid zone becomes a trap when the objective of its is done, right? Same goes for the inducement, right? Yep, exactly. So I'm going to show you two examples, right? We have this demand zone, everything like that, right? push price towards this high, objective first taken, right? Comes back, becomes a trap, right? Same goes for this one, right? Either this gave you breakout structure, but the original objective, or let's just say that this mitigation to the left, what was the purpose of this was to just take out these liquidity highs. Same for this low, right? And when price comes back, we see what is price starts to respect it, giving them reaction in a build-up phase. So it is not generating more liquidity under this low, right? So purpose of this is done, purpose of this is done, purpose of this is done. That's why we cleared all that liquidity down there, right? Down. There we go. Good. Yep. I hope so that makes sense. Good. Do we have another question? Okay. Do we have other questions, guys? High time frame. So let's just go H4, H1, whatever that is, right? So let's just go from daily, right? Whatever you use, right? So this is what I'd like to do on daily and everything like that. High time frame, okay. I just go on daily charts. I just understand this. Okay, potential bullish market, right? That's pretty much it. I go on H1, I just zoom out and understand what is my general market direction. So I saw what was this major breakout structure to the high side, inducement low turning bullish, right? That is how I use my time frame. Then I say, all right, what's objective of this inducement taken, right? If price fails to move away from there, what could be the next potential target? Maybe mitigation or clearing out this high. That's how I use my high time frame, right? And if I do have some sort of key level like IPA levels, right, then I'm gonna mark those key levels and rest everything, all the stuff is gonna happen on your intraday time frames like M5, M15, M30, whichever is clear to me, right? You need to be a bit proactive, right? Because if M5 is not so clear for you, you just shift the time frame to M15 and see if that is more clear, that is much more readable to you. If that's okay, if it's also not so clear, it's noisy, you just move to M30, right? And you just need to be a bit proactive, right? What is the best? I hope that answers your question. How do I analyze high time from direction, right? You just zoom out. There's nothing crazy. You just zoom out and you see recent trend, right? So we're gonna have two types of trend, right? We're gonna have a major trend, which is going to be daily time frame or monthly time frame, and it is going to be really major trend, right? And then we have a recent trend, which is going to be this leg, right? So H1, all I need is understanding this trend and some sort of objective update that could push price lower. That's it. And everything is done intraday time frames, right? What is the best thing to do when liquidity keeps getting busted and then trend keeps going one way after taking a load? That should make it worse, right? If that's the case, then the liquidity points that you're marking are not correct ones, right? Or there aren't the ones that are going to give you some sort of reversal points, right? If I do have an example, let me just no, oh man. Okay, let's just take this example, right? I don't know. I've seen a lot of guys thinking of a full reversal from this point, but they just keeps on forgetting that market was trading away from this higher time frame inducement level, right? So this liquidity point isn't something that could give you a potential reversal, but it is generally a target for this inducement low, the first US liquidity target, right? And then you zoom in and see what is price doing. So clearly price is inducing lows to go high, and that is your evidence that price is still bullish. What are we doing? Breaking structure to the low side, adding smart money traders, breaking structure again, mitigation. So what are we doing? We are generating liquidity at this high inducement. Cool. Nearest liquidity objective done. What should we do? We should move away, right? So that is why we have this bullish trends, right? So it is just understanding these small details, and you're gonna understand why your levels are failing and all those stuff, right? First thing first, you need to work on your liquidity levels, right? If because this is not something valid liquidity point, right? I won't do that. I won't really say this as something that could give me a potential reversal, right? So yeah, if your liquidity points are similar to these ones, that you need to work on your liquidity points, right? But if you're getting a good liquidity level that is giving you some sort of reactions, right? Then you need to understand the context behind it. All right, this is an inducement, but till where it could go, till where the reaction could be, and what could oppose a reaction to, align price again towards the higher time frame narrative or whatever that is. Okay. I don't really have a bias all day, right? So every single day of the week, I just do my general high time frame analysis on the first day. Right, that is, I just explained earlier, zooming out, understanding what is my high time frame objective, what is the general trend direction, obviously the recent one, and the influence of the high time frames, and then let's just say that I'm here to trade this particular day, so I just like to mark up my liquidity points. I just see a nice little breakout structure to the low side, right? So then I start marking my liquidities, and then I just follow this, step by step checklist. That's it. Oh, that's pretty much it, bro. Like how uh, I have my daily approach towards taking a setup, right? I don't use the bias and everything. I don't like to make myself biased for one particular setup, because let's just say that I'm biased for bias, right? I keep on taking buys and buys and buys, forgetting the fact that price is inducing high to go lower. So you need to have an idea on the both sides, right? What could price do to potentially go low, and what could price do to potentially go high, and then you need to go with the one which is backed up by more confidences and more information, right? That's how you'd like to have so you have your plan for the day. It's not like you just say, all right, market is bearish, you just want to keep on selling and selling and selling. No, you need to have a plan for both. What are you going to do when market is going to do for the sales, and same thing for the buys as well. So, and then you just select whichever is the best one for you at that moment. How do you choose a valid liquidity points, right? So what qualifies as a valid liquidity point? Good, it's a simple thing, right? For me, a valid liquidity point is a one which attracts general public and have an influence on them to engage into particular positions like buys or sells, whatever. I'd like to mark a high or the low, anything like that, and I'd like to see price giving any sort of reactions, confirmations to those guys, and I would like to see them getting into the positions and then price clearing out those level of liquidities. Those are my most valid liquidity areas, right? Not all the random highs and the lows, right? So that's how I qualify my liquidity points. Good. Do we have any other question? I'll just give you this very short, very simple example, right? So what do I see? General bearish. I'd like to get into buys. So he says, what do I need to do? I need to mark on my value liquidities, general breakout structure, mitigations, creating what? A level of support and resistance, inducement, valid, your zone, you get an entry, zoom out, clear liquidity target. So this is how I like to decipher my liquidity points, right? Nothing rocket science, really simple as, it's as simple as everybody. Most of you, they just like to make stuff complicated when it's very easy. It's really easy. They look for false breakouts before taking liquidity for reversals. No, not really. No. Nah, I don't do that. I don't look for any sort of false breakouts, anything like that for reversals. Nothing like that, bro. Oh, okay, in there, right? So how do you know that this liquidity point is enough for price to move away? You just need to understand the reaction after the inducement, right? If you have something which is quite convincing, which is showing some true intentions, then that is your value inducement. You could trade away from it. But if it isn't like, a true intention, or the reaction is something like this, then it is clearly an injection, and you'd like to wait for another level of sweep of that, inducement, and then wait for the same thing. I think I explained this earlier as well, like just around the start of this session. Good. So, do we have another question? Do we have another question? Okay. Also, do we have okay, do we have bibliothek in here? Okay, no, no. LTC is simple lower time from confirmation, right? Any sort of M1 confirmation that you want to go with, just do it. LTC is simply lower time from confirmations, like your RBUs, your candle understanding, your rejections, whatever you want to use, right? Inversion, fair value gaps, anything, right? Just have that after everything is done, right? So anyways, do we have someone who's willing to backtest? Because we've been doing this for the last 3 4 sessions, right? So do I have a volunteer to backtest today? Anyone? Doesn't matter, right? Obviously, I'll help you while you backtest, but yeah. Okay, so scale up, right? Uh, Here's the thing, right? Scale up. It needs to have two things, right? You need to be brutally confident in what you are doing, and it's not like just backtesting everything like that, but you need to have some sort of solid data on the live markets, right? Once you I would say that minimum should be like 3 to 6 months, right, of consistent gains, and these gains, the equity curve around this time, it shouldn't be something very volatile, like you just make 20% a day and the next day you lose 5% and the next day you lose 3% and then you make 20% again. No, if you have something like that as equity curve, then most likely 99% of all those investors, they are going to classify you as a risk trader, and they won't fund you. So it's going to be really hard for your scale ups, right? So what's best is that you have consistent gains, maybe 5% a month for 6 months. That is very decent. That is very good. You need to back it up with your broker statements, everything like that, and then you can go for the fundings, or you could do the same thing with the prop accounts if you use prop. I'm not a big fan of prop firms, right? I want to recommend you doing that, but this is how you'd like to scale up, right? This is when you know you could scale up. So 6 months of data on live markets, making consistent. So let's just say if the first month you make like 7%, right? The next month should be around 5%, plus minus 2%, around that, a 10% of the gain, right? So it could be 9%, it could be 6%, or that scenarios, right? If it is very, very volatile, then it means that you need to practice, right? Get more data, unless you have, sorry, until you have a very consistent gains, right? Very consistent equity curve. That is when you know you are really good for the scale up. If you just want to rush the process, okay, you made 10% a month, then you say, all right, I did 10% a month, next month I'm going to do 20%. That is not scalable. That is not sustainable, right? And you can't go professional with that, right? So whatever percentage that you're making, it needs to be consistent. It doesn't need to have crazy spikes up or spike downs in your equity curve. And once you have something like that, then I think you should be pretty confident and you should go for the scale ups, right? And now regarding scale ups, the problems that you're gonna face again, this thing, right? So the biggest problem is that a lot of guys trading high risk to reward strategies, right? They have a very volatile equity curve, right? Where they make certain percentages in a trade in few hours, and then next few trades losing, and then again a certain spike up in the equity. That is a big red flag, right? Let's just say if I want to fund a trader, I don't want the trader that has something like that. I'd like to see a decent equity curve, right? If I'm seeing something like that, why not just put my funds into any sort of stocking, index or any sort of crypto, right? Because it is pretty much simple, right? Risky assets, right? Why do I need to take risk on that trader as well? So this is the biggest problem that the biggest problem to get the investors to get the funding is to have a volatile equity curve, right? So no, you don't need that. You need a consistent gain. It doesn't matter it's 5%. You just have a target in your mind that you make 5% a month. Maybe you made that in 2 weeks, right? And then you drop your risk very low, and maybe the next 2 weeks you make like 2-3% combined, right? That doesn't make it a volatile, right? But you're making 10% a week and then losing 3% next week and then losing 5% and then making 20% the next week, right? This is too volatile. So you need to focus on these points when you want to scale up. And obviously, once you start to see some decent, consistency, sustainability in your equity curve, you're gonna have an idea yourself that now this is the best time for me to scale up, right? To go out, to go to the big guys for the funds and anything like that, right? Okay, do we have another question? Also, one more thing, bro, you can't. I haven't seen like guys showing their prop firm track record to get professional funding. It doesn't work like that, right? So if you want to go professional, you need to have your live stats, the trading with your own funds, right? That's the highest possible scenario of you getting a good funding. If you're going with the prop firm stuff, there's a high chance you can just see it and reject it, right? Okay, explain. Go ahead. Yep, go ahead, buddy. Okay, yeah, entry helper. All right, good. I get it right. So entry helper, I don't really use entry helper. I don't see it like worth it, right? Uh, Entry helper is just like a normal confirmation, right? Like you wait for a relative breakup structure on M1 after inducement, right? But the same thing you could do is that you could have a confirmation on the entry confirmation, right? The indicator once the inducement is started and get into the trades, right? I don't like to use indicators for the confirmations, anything like that. So I don't use entry helper. I would also say that rather than using entry helper, you just have an understanding of the raw price section, the candles and everything like that. That's going to help you in longer run, right? So yeah, I don't really recommend you guys using entry helper like that. Uh, mhm. Guys, do we have any free backtesting software? All right. Mm, all right, good. Right. Also, you could do is that you could have a free account on a fixed replay, and once you have done a session, you could delete those sessions and get yourself a new session, right? So every time you just go back to some FX replay, you are done, you have your starts, you understand those, you delete the session, and then you have a new session, right? Also, there's one app, if I'm not wrong, one website, something like Trade Casa, Traders Casa, something like that. You could search it up as well, right? Uh, yeah, these community sessions, yeah, they not every weekend, but mostly like after every 2 weeks, we do have a community session, right? I was Yeah, you can do it back test if you want to do it. You can do it today as well. Okay. Oh yeah, yeah, no worries. It's good. Right, so I watched your YouTube video about volume candle entry model, which is an aggressive entry model, right? Aren't there any specific conditions, right? So here's the thing. Let me just clarify it, right? Those volume candle entries, they are very aggressive, right? And you are going to literally lose at first because you don't really understand how it works, right? And maybe you backtested 100 trades, 150 trades, and then you start to understand how it actually works, right? So it's simple that you are losing using those entry models, right? I don't. Okay, so my most entries that you're gonna see, obviously I've been quite inactive on Instagram. I usually used to post my trades, but if you see my past trades, right, like 80% of the trades are all aggressive, right? I don't wait for M1 breakout structure. I don't wait for anything. I just see, all right, this is my candle. Okay, this is my confirmation. I execute, right? So you need to have a solid understanding of candles, and you're gonna lose a lot before getting into the good trades, right? It's just a part of process. You need to practice more to understand real intentions, real candle understanding, right? Do one thing is that rather than backtesting first, go to these played out charts and you see, all right, this is where I would have taken an entry. Now go and one and start to identify that entry model, right? And then make a list of tips, anything like that you want to do for yourself, and then write out the differences for every single trade, and then you see, all right, what is working, what is not working, and then backtest it. Absolutely, that clears the question, buddy. Uh huh. Okay. Yeah. Honestly, I don't know anything like that. Maybe you could get captions using some AI's websites like that, but I don't really think you're gonna get captions in Hindi, right? Maybe you could find maybe you could find someone from India and this group that could help you understand those concepts in your native language. You just need to you just need to connect with that with the right person, right? All right, so how do you understand the right volume candles? So you compare those candles to the previous candles, right? So if I'm like, okay, let's just go up there, right? Okay, there you go, right? So here, right? So here, how could I understand the right volume, uh, right? Volume candles is that you compare. If I'm looking for sales, I'd like to see bearish volume candles, right? So I'm going to compare these volume candles to the left with these recent bullish volume candles, right? And if I see them like quite significant than the bullish ones, and these are my right volume candles, right? And then I can execute confidently, right? So this is one way to understand or to identify right volume candles, right? You just compare them with the past candles, right? Okay. I hope this answers the question regarding right volume candles, right? Oh yeah, yeah. I remember them. Okay, cool. Guys, do you have any other question, right? Okay. Uh, Objectives. Ah, bro. Objectives, objectives, objectives. Let me just go back. Okay. How do I explain objectives? Okay, cool. So, two things, right? Simple as that. It's going to be very simple, right? I'm going to try to explain it in kind of very simple manner, right? But say that we are in a higher time frame and then we have this inducement, right? So you mark your next liquidity point. That is going to be the first objective of this high time frame inducement. And then what you do is you zoom in on the lower time frames, right? Where the fuck is it? All right, right. So you zoom in on lower time frames, and now you're gonna have something inducement low, right? So now this inducement has an objective which is going to be this nearest liquidity, right? So now you can ping pong between these liquidity points like this inducement again. What is going to be the nearest objective? The first objective of this intraday inducement is to this high, and you follow that inducement objectives and inducements towards you have your high time frame liquidity taken. Now, once it is taken, now you would like to wait for the next development of the price action, and then the same cycle repeats itself. That is simple as that, right? Always work your liquidities from nearest to the furthest ones, because you don't know if price is going to take out this liquidity low and then moving, or move away, or price is going to take out this low and then move away. So you need to have it first nearest value liquidity point, and then you want to go to the furthest ones. Maybe we have something like this, a high, respecting it, creating more liquidity, inducing low. So where's the liquidity above this? So this inducement has a specific purpose to take out this liquidity high, and that's how it moves, right? This is a general way to understand the objectives, right? Absolutely, like makes sense, right? Okay, do we have another question? All right, buddy. No, no. It doesn't happen every single week, right? It usually happens like after 2 weeks, right? If I'm free, I try to do it like weekly basis, but mostly it's like after every 2 weeks, right? So, and also I announced like a couple of days earlier, so you can have an idea from that. And all right, appreciate it, buddy. Appreciate it. Okay, do we have another question? Okay, let's just see. Do we have like more questions, and then maybe I could just select a random guy from you. Again, backtest. Yeah, we could do anything, right? Okay, 44, around 45 minutes into the session. Good. So I think I missed a question. Kind of up. The fuck is it? Okay, yeah. Nico, right? So you term mitigations, right? So it isn't something crazy. It is just a normal smart money. You see this smart money being followed. See this follow, see this. So this is a simple build-up phase as well. You can mark it as a channel as well, but this is also that mitigation cycle that you're talking about, right? It's the same thing, different terms, right? Different names. Cool, nothing crazy. So in here, right, you could just mark it as a single line, or you could just have it as your channel, right? And then inducement high, you go low, right? Same thing. It's nothing different. Okay, we do have it. Do you mark everything when trading? What's your entry criteria mostly? Uh, what do you mean, bro? What do you mean by mark everything? Right, my charts are like mostly two lines and one box. That's it, right? I just mark the most valid points. I don't know. That's just experience like that. It just helps me stay away from the noise and everything. My entry criteria, well, it's just simple. After getting a solid reaction, I just refer to my entry models. Could be a reaction based entry, could be a candle based entry, could be a breakout structure entry, anything like that, right? Could you show us the trades of this week? All right. If you're asking in general, I could show you, but if you're asking like what trades I took, I'm not trading for the last like 3 4 weeks because I'm quite done for the year, right? So I'm just chilling out this time. Good. So, all right, I could do this is that I could mark out every single, good trade from this week on your USD, right? That is going to be a good one. Good. Sorry about the volume candle for intro. I didn't quite get it right. Bro, I would say that first watch the video on it, right? I tried to explain it quite clearly, right? And if you have done it, right, then I would say that you watch this community session where I explain the volume candles again, right? So you're gonna get it much better. Again, how could you identify a valid volume candle? Is that you compare those candles, the ones you're interested in, to the ones to the left, right? So we had bullish momentum coming in. So if I want to see valid bearish volume candles, I like to see these candles, right? Kind of, I would say I'm going to compare these bearish candles with these bullish candles and see which is like having more influence on the price section, right? So I clearly understand bearish candles having quite greater influence in the price at this moment, mitigating that M5 zone. And now I just wait for my entry model and I just execute, right? Bro, I don't gamble, bro. I don't do harm stuff. No gambling, guys. Okay, any other questions? Market structure is very important, right? Market structure is just very important. I could tell you this much, right? Market structure is really, really important. Doesn't matter you trade late, doesn't matter you trade anything, but market structure is very important. Oh, I trade everything that is fitting my criteria, right? That could be reversals, that could be continuations, anything like that. I just don't, I just trade everything. I have tried smart money trap reactions as well, right? So just understanding that what you're trading and when to get in and when to get out, right? You could see my few trades, just get my TP and then market reverses completely, right? So you need to understand your point of entries and exits. I just trade everything. If I see a good opportunity, why would I miss it, right? If I'm missing it, then you're just a fool. Okay, my main pair. Okay, right. So my main pair, your USD, GBP USD, gold, and Nasdaq. Right. So these four are my main pair, and I don't really trade this one, but when someone asks me for the analysis or right, just a markup, I just use these ones. But I just trade these four pairs. Right. These are like bread and butter for me. I do have everything, right? I don't have one entry model, right? I do have like seven different entry models. I mean, like six, seven different entry models, right? And every entry model is different, and you know, like that. So I just select what's best according to that moment, according to the conditions of the market, right? And I execute the trade, right? So I don't have one entry model. I do have like six, seven entry models. Just don't ask me to get all the entry models, right? I already like shared like one, two already, right? Come on, buddy. Okay. Bro, first just go and understand the volume entry model, right? So, uh, honestly, the volume entry model is like one of the really craziest entry model where you could actually get the highs or the lows, right? The tops or bottoms of the market, and you can go break even straight away. No, I won't write my entry models, right, buddy? Yep, it is. It is on my YouTube channel. Bro, I already shared like bunch of stuff. Just first go and like try to the master it, right? Yeah, exactly. Once you're good with that, then you could say, all right, bro, I mastered that stuff. Now could you show me more? And then I'd be like, all right, this guy did that stuff, right? And then I could say, all right, cool. I could share some more stuff as well, right? So you gotta first show me that you're understanding this stuff, right? You could volume candle is like my second easiest entry model, right? So yeah, you can see like a lot of guys they're just getting molested by that entry model. So what could you expect me to do then? Just give them entry models so they can just blow their fucking accounts. That's so crazy. Okay, okay, bro. Let me share the. I mean, bro, go to this here. You're gonna see fucking social media section, right? Channel. You're gonna see all my YouTube uploads here, so you can just click any link there, right? And you're just gonna just move it to the channel. Okay, BOS entry. I don't know when I last time used the relative breaker structure entry model. Trust me, it's been so long. I've been using the volume entries, the reactions, the 5 second stuff. That shit is so cool. Like you just get a tick perfect entry, and you could go break even in the next two candles, and just let price do whatever it wants to do. Okay, cool. Do we have another question? If no, then I think what could we say? Could end the session. Yeah, definitely. Yep, go ahead. Bro, you could go, bro, just go towards the social media channel section and you're gonna have everything there. So click any random link, obviously, all towards my main YouTube account, right? When did you get consistently profitable? At what year? I would say, bro, I already made money through crypto, right? I would say if you want to say that being profitable, right? I was profitable from day one, right? Because I made like crazy money from the crypto boom during COVID. Okay, trading, I would say 20. I was profitable using a basic strategy, which was like mix of wake up plus SMC, right? That was around like 20, end of 2020, right? Yeah, exactly. I would say 21 was the year when I get like consistently everything. Nah, crypto was so fucking fascinating at that point, right? You just put like few $100 and those turned out to be like few tens of $1,000s, right? So it was okay. How much money, bro? I've been in this market for the last like 7 years, right? Into my 7 year, right? So I just come. It's like the start of my 7th year, right? Let me just count that. Like, yeah, exactly. Yeah, no. I just completed my fucking 7th year, right? Into my like 8th year. Ah, so good. What? How much do you have in total? What you asking, buddy? Oh yeah, the entry models. Okay, good. No. I started, bro. I started with. I would say I moved pretty fast from like general retail stuff. I think I did general retail stuff for like 2 3 months, and then I moved towards wake up, right? I had a good guidance at start, right, and then moved towards smart money concepts, right? So yeah, and after that, I think it took me like 2 more years to understand, sorry, to get everything solid, right? That's crypto for you, buddy. Yeah. I made money from crypto. I like spent something, right? And then I put like most of it into mentorships, right? And then I lost bunch of it, and then I was back at zero, right? Yeah, bro, I just completed my 7th year, right? So into my 8th year. No, yeah, I just told you what models I trade, right? So I started with general lethal stuff, right? Train lines, those stuff, and I did that for like 2 months, 3 months, right? And then moved towards wake up, right? And then towards market structures, SMC, right? Okay, so do we have any other questions, guys? Come up with questions, man. I don't want to answer some good questions, but oh man, no questions. What the fuck? Futures. I'm trying futures. I'm playing futures. I bought a funding kicks account, right? I already completed the fucking profit target, right? And because I fucked up consistency, I did that in like 2 trades. I gotta do like double of it, right? So then now I just stop it. Fuck it. Let's just buy a new challenge, right? So I do still have that one, right? It's just I need to meet the consistency rule right now to get a fucking uh, like live account on that one. Yeah, futures is easy. It's easy like GG's. You got 4 contracts, you get like one candle and kaboom. Kaboom. Okay, let me just stop. Okay, okay. Also, we don't have any sort of technical related questions now, right? Because I'm about to stop the recording. So I won't really answer any of those technical questions. If you have something related technicals, you could ask right now. My best entry type is obviously candles, right? Just understand candle, right? This candle is quite good for me. Just fucking execute market, right? Get yourself the smallest stop possible and you just go. That's my best entry type, right? I really love the entry models, which is reaction based entry and candle based entry, right? Those two are like my most favorite entry models, right? Yes, I'll post this on my YouTube, right? So here we go. Let me just stop recording.